Marcus, I appreciate that introduction. As he said, my name is Julie Mockle-Folks. I'm a partner here at Scott & Scott LLP law firm in Southlake, Texas. And today I'm going to discuss how to mitigate 5 IBM licensing risks. I don't want to suggest that there are only 5 licensing risks with IBM. There are clearly more than that. But these are the licensing risks that I see most often with my clients who are IBM customers. The first and often most difficult risk to overcome is that many customers have had relationships with IBM for 20 or even 30 years where they have multiple agreements, and the agreements have several amendments and addenda, and there are separate purchases that are made under either the IBM licensing agreement or the new Passport Advantage license agreement called the IPLA. There are multiple document repositories that IBM's clients use internally to store those documents, and it can be very difficult to locate the documents, let alone compile a complete set of signed agreements to evaluate a licensing position or answer a particular licensing question. The next licensing risk is that customers don't always understand the relationship between the license scope and the licensing restrictions and their own use cases. So we'll talk a little bit today about how to reconcile what you're trying to do with the IBM software versus what your agreements say you can do with the software. Geographic limitations merits a short attention in the speech today, simply because a lot of companies define their geographic regions in different ways, and there are a lot of new issues that are arising with the use of virtualization and colos on different continents. I would say that the single biggest IBM licensing risk that my customers face is the ability to license a smaller capacity of a physical server, and the requirement that customers who are trying to license on that basis install, configure, and report using the IBM License Metric Tool, or ILMT. Many of my customers say that they don't have an ILMT or a subcapacity licensing problem when we first begin to discuss IBM licensing, and most of those customers are not correct about that. So we're going to spend a lot of time today talking about subcapacity licensing, the ILMT requirement, ways to look at those requirements, and what can happen if you misunderstand or misapply those licensing requirements. And finally, the last half of the talk will be dealing with how to determine proactively whether you're compliant with your IBM licensing with your IBM licensing rules and what to do in an IBM audit. As Marcus said, feel free to answer any questions by ask any questions by typing them in the question box. And if I have an opportunity, I will certainly try to address as many of those as I can throughout the speech. As I mentioned, IBM agreements are often difficult simply because the first problem is that customers don't know where to find them. They might have multiple document repositories covering the last few decades, and many customers realize that they don't know where to find their IBM licensing agreements until it becomes an emergency and they have to find them. Once you're able to find as many documents as you can, and once you determine that you don't have a set of signed documents and that there are many versions floating around of those documents, you will have to compile a list of what you think the relationship is, what the relationship is governed by. And even after you get that, the IBM agreement that you have is probably not going to be clear, and it may not have a complete set of instructions for how to license your software. The IBM agreement also has very complicated and sometimes confusing provisions about what your responsibilities are to use the IBM software and also to respond to inquiries about your use to the IBM software. People ask me, what can we do about leveraging our relationship with IBM. Usually they're asking me that after there's a problem and IBM is making a demand based on the agreement. My clients want to change the agreement at that point, and it's important for everyone to understand that the best way to mitigate an IBM agreement risk is to take the opportunity when you're making a large purchase to negotiate those provisions that are most troublesome at the beginning, before you acquire the product or before you make a large purchase. If you are already in breach, and if IBM is telling you you have to pay a certain amount of money to resolve an inquiry or resolve a disagreement about licensing, you will have very little leverage to negotiate a stronger position in your contractual language. So how do you negotiate favorable licensing terms? One of the things that I instruct my clients to do is evaluate how you're going to use the software. This seems obvious, right? You definitely want to make sure that you understand how you're going to use the software in the environment, but it is one of the most commonly messed up part of the negotiation process. So what will happen is our clients will know what they're going to do with the software. They will explain to the IBM team, this is what we're planning to do with the software in our environment. The IBM team will say, yes, that's great. You can certainly do that. My clients will then agree to the standard IPLA without ever realizing that the IPLA does not allow them the opportunity legally to use the software in the way that they've just told IBM that they're planning to use it. And the regular license agreements that IBM typically puts forth to its customers contain what we call a merger clause that says that the complete agreement is the one that's in writing, and that the customer and IBM are not able to revise the agreement orally or with prior communications. So what that means is if you've told IBM, here's how we're planning to use the software, and their sales team says okay, and your license agreement specifically says you cannot use the software in that way, the license agreement terms are going to prevail. So you can see why that could be a big risk to customers who may not be evaluating or reviewing their licensing agreement very carefully. If virtualization or any kind of clustered environment, co-located networks, data centers, any kind of third-party hosting is involved, please make very sure that you understand all of those licensing requirements, because there are very specific restrictions on who can access the software, how you can use it, what you can provide third-party access to, and you want to make sure that before you spend the money, you have a good understanding of how much the true cost of IBM software ownership will be. Many of my clients tell me at the end of an audit where they finally, for the first time, understand their licensing obligations, if we had known the true cost of this project, we would not have signed off to go forward on it. If there's an ambiguity, it is not a good idea to wait until after there's a disagreement. If you see that there is an ambiguity or something is unclear, particularly as it relates to the way that you can use the software, please try to identify those ambiguities and resolve them in advance. Many of my customers tell me that they feel pressure from the sales team to make no changes to the licensing terms. In some instances, the sales team tells my clients that there aren't any opportunities to make changes to licensing terms. And it's typically the case that IBM is more incentivized than you are to make a sale by a particular day. And the threats of losing big discounts, in my opinion, are not good excuses for entering into an agreement with bad terms or an agreement that doesn't give you the right to use the software in the way you're planning to use it. So it is, in my opinion, more important to make sure you have contractual language that fits the relationship you intend to have than it is to get a few extra dollars off in the transaction. Ensure that what you are trying to do with the software is expressly granted in the license grant. So for instance, if you're planning to use IBM software to provide services to your end users, make sure your license grant says it is expressly understood that customer is planning to use the software to provide services to end users. What you don't want to have is a situation where you've paid for many years and you learn for the first time in an audit that you don't have the legal right to allow third parties to access the software that you license. Make sure that you understand what rights exist on termination or expiration of the license agreement. When does this arise? Usually in the middle of an audit when IBM says, if you don't pay us the demanded amount within 30 days, we're planning to terminate all of your IBM licenses. Make sure you understand what rights they have, what rights you have to cure, what you have to do if there's any kind of claim that might trigger the termination provision. And make sure if you're talking about those kinds of provisions that you're getting legal involved, especially if you're revising your license terms. I know that many of my clients have very educated and adept and talented procurement teams, but the procurement teams don't always understand the way that the software is going to be used, and so they focus on many of the provisions that are quite important, including indemnification and limitation of liability. But we need to make sure that legal and the business team are also involved in the negotiation of terms, because I can't tell you how many times I've had agreements that are presented to me as final that the business team hasn't seen and would be able to tell right away that there's an issue. So make sure that legal and business teams are involved with the procurement team to ensure that your license agreement reflects what you need to do and what rights you have. With respect to the audit provisions, yes, it is sometimes possible that you can negotiate an audit provision with IBM, not always. It is surprising to many of my clients to learn that in some agreements, the publishers, including IBM, have a right to actually enter your offices and inspect them to make sure that you are still compliant. I know that many of my customers will have security concerns. They are healthcare organizations that have HIPAA requirements. I have financial institutions that are governed by GLBA, and under none of those regulatory regimes is there a contemplated ability to allow a software publisher to come in and start inspecting computers to make sure that they're compliant with licensing agreements. So one of the things that's very important for my clients to understand is if there is a right to enter the office and inspect it to ensure compliance, you need to make sure that you negotiate that away before you agree to it. You also need to make sure that you're carefully reading each of your ordering documents and your transaction documents, because in many instances, there are cross-references to new agreements that you may be accepting by accepting the terms in a transaction document. And so you don't want to spend a lot of time carefully negotiating a favorable audit provision only to learn that you superseded that carefully negotiated audit provision by inadvertently accepting the full terms of the IBM Passport Advantage License Agreement, or the IPLA. Make sure you understand what the auditor's rights are, what the publisher's rights are with respect to third-party auditors. Many software license agreements, including several of the IBM form agreements, say that you will provide reasonable assistance and you will respond to requests for information as long as those requests don't interfere with your normal business operations. IBM takes a very broad interpretation of what that means, and IBM includes in that broad interpretation the ability to tell you that you must allow their third-party auditors on your premises to conduct a validation portion of the audit review. And they also, in many instances, determine that that means that if you are allowing third-party customers or third-party entities to access the IBM products, that you will allow them, IBM or their auditors, to audit the third-party use as well. So make sure you understand what the auditors can do, whom the auditors can audit, when they can audit, and how intrusive they're allowed to be. And if there are any questions about that, negotiating those audit terms at the beginning of the relationship is often more successful than doing so in the middle or after a dispute has arisen. Additionally, it's critical to understand what penalties might be imposed if there is a question about licensing. And I say if there's a question about licensing because, as I'll talk about in more detail in a few minutes when we discuss the audit provisions, you will see, if you haven't experienced it already, that it is often the case that what you interpret your IBM license position to be and what the auditors interpret your IBM licensing position to be are two entirely different things. So if you have the opportunity to negotiate the audit provision before you make a license purchase, or if you're strangely just starting your IBM relationship for the first time, make sure you take full advantage of that because you may not get that opportunity again. So, what are some of the problems that my clients face with their IBM agreements? Imagine that you have 20 years worth of IBM software licenses, and you're trying to reconcile those into a full package of the entire license arrangement between you and IBM. If they're not signed, if some of them aren't dated, how do you know which ones are the most recent ones or which ones are the ones that are going to govern the relationship if there's a question? Sometimes you can't. Sometimes you're in the uncomfortable position when IBM initiates an audit that you have to say, we have no copies of any of our effective licenses for IBM products, and we need you, IBM, to send them to us. Additionally, IBM has a practice where they will often send notifications of licensing changes to the official account representative on record with IBM for that customer. You can see that this might cause several problems. The biggest one that I can think of, and the one that most people complain to me about on a regular basis, is the announcement for subcapacity licensing that a customer must use, configure, and report using ILMT. IBM, in many instances, sent an email to the account contact on record that said, we're going to make changes unless you object within 90 days. Many of my customers had not kept that account contact up to date, and this important email notifying the official contact for the customer of a significant licensing change to which the customer should have objected if they had objections got lost in email boxes for employees that were no longer there. So I would have customers tell me, you know, Joe hasn't worked here for 15 years. Why did IBM think it was okay to send a license change, a licensing term change notification to Joe? And when we looked, it was because the customer never updated the official contact of record. And so IBM sent the opportunity to object, and the client never understood that they had an opportunity to avail themselves of those objections. Some of my clients look at what we call document soup that is representative of their IBM relationship at this point and decide that they need an entirely new agreement. So when they determine that new agreement process needs to begin, it's helpful to know that IBM usually needs some sort of purchase along with it to attach the terms to. And it is important for the client to understand that if there is a cloud component to the agreement, that there may be multiple agreements that are required as part of the document package. And so it's still not going to be as clear as you would like for it to be. And even if you have an opportunity to negotiate an entirely new set of documents from scratch, it's still going to be difficult to get some of the protections that you need. So where do you start when you are reviewing a license agreement to determine whether or not it is reflective of what you expect the relationship to be? The first place that I ask my clients to look is license scope and restrictions. The important components of the licensing scope and the restrictions are, number one, how is the licensee defined? So is your company and all of its related entities covered under this license? or do the related entities need their own license? How do we define a related entity? Is it someone with more than 51% ownership of the business? Because if you're a global company, there may be governmental restrictions from foreign governments on who can own majority interests in companies that are domiciled in that specific region. And so it might have to be a joint venture or some other entity structure so that you can comport with federal governmental requirements. And if you expect your entity to be able to use its license to cover that particular affiliate, is the licensee scope or is the licensee definition broad enough to include that company as well? That's something to take a look at. The second one I want to focus on is the restrictions on commercial use. So a good example of that is WinZip. So WinZip had famously a very long free trial, and many of my clients told me yes, but I never used it outside of the free trial period. And I asked them, but did you use it while you were at work for company business? Because WinZip in very small print had some restrictions on commercial use, so any use for commercial purposes was arguably outside of the granted licenses scope. Geographic limitations on the license uses. I'm seeing this more and more, and I'll talk about this in a couple of minutes on a geographic scope slide, but I'm seeing more and more concerns arise as companies get more global and as the technology world gets smaller and smaller. There are a number of implications for these geographic limitations that may not have come up before. Many IBM licenses, particularly old ones, either don't allow for installation on virtual servers or have onerous licensing terms. So make sure that if you're virtualizing for the first time, you understand how that works. And I'll talk a little bit more about that in the subcapacity section of our talk today. And then make sure that if you're allowing any outside users, third parties, whether they authenticate or not, you understand whether or not your license scope and any of their restriction allow for that usage expressly. The general rule of thumb is if the license grant does not expressly allow you to use the license in that way, then that use is prohibited. You can't assume because it's not expressly prohibited that it's granted. It's really the other way around. So geographic limitations. One of the most comical issues that I encounter with my global clients is they have very quirky ways of defining the world. And so, for instance, on the continent of North America, we have Mexico, the United States, and Canada. Many of my global corporate companies define North America as just the US and Canada. So when we're negotiating for scope and geographic the ability to use a license in a geographic region, we need to make sure that we're very clear that if we as a company have a quirky way of defining the world, like Latin America, we need to make sure that we're clear about what we consider Latin America, because the software publisher may not be interpreting it in the same way. It's better to just say you can use this product in the following countries. So that way there is no question about where it can be used. One of the rising questions that I see related to geographic limitations is, can the products be used outside the territory where the licenses are purchased, especially if your foreign affiliates are allowed to access servers remotely from a foreign territory? So if all of your programmers are physically located in India, but they're using RDS to connect to servers in a colo in Kansas and run IBM products, is that an allowable use or is it not? And some of my clients want to ask for a worldwide license, but they often don't want to pay the corresponding licensing fee that goes along with an IBM worldwide license, if it is even available in their instance. So types of IBM licensing. First, we'll talk about full capacity. And the reason that I want to talk about full capacity first is this is the default licensing position. I have a lot of customers, and I'll talk a little bit more about this when dealing with subcapacity licensing, who are telling me all of the reasons that they get to use subcapacity licensing without qualifying for it because they somehow encountered difficulty when they were trying to adhere to the requirements. So the best way to look at it is your default licensing position is you have to license the full capacity of any machine that IBM is installed or used on. IBM typically uses the processor value unit, or the PVU. It's based on cores. It's not based on chips or sockets. You can also use, in some instances, a combination of processor licenses and authorized user licenses, or just authorized user licenses. Increasingly less common are concurrent users, which allow a certain number of users at any given time to access. And then there's also a UVU, or user value unit. It's typically restricted to Tivoli products. So if you are dealing with IBM DB2, and you are determining how many PVUs you need on the particular server, you may learn that if it's a large server with multiple virtualized servers residing on that server, it might be cost prohibitive for you to buy enough PVUs to cover the full capacity of that server. Some larger boxes have thousands of licensable PVUs on the one physical box. And so it may be cost prohibitive for you to license a particular product for the full physical server. So what you may consider doing is licensing on a subcapacity basis. And on a subcapacity basis, what you want to do is make sure that you are never exceeding the value of the licenses that you have purchased. So say you have a physical server that has a total possible PVU license count of 1,040, but you intend only to license 250 PVUs because that is the subcapacity, or the smaller capacity, that is going to be able to use the functionality of those IBM products. In other words, you have a virtualized machine that has a PVU value of 250. So you'll have to make sure that you have something in place that can demonstrate to IBM that at no time during the license period did you ever use the full 1,040 PVUs that were available on that physical box. So the way that IBM recommends that you do that is to use their IBM license metric tool. Once you install it on all of the servers and configure it, you need to run reporting either monthly or quarterly, and make sure that you have that reporting on hand. You don't have to submit it to IBM unless it's requested, but make sure it is available on request. If you install it, but you don't configure it and you don't report on it, then you have not met the requirement for ILMT for subcapacity licensing. I will say that this is the single most expensive and most common error that my customers make, my clients make, when dealing with IBM licensing, is failure to understand the requirements related to subcapacity. So in many instances, my clients tell me things like, we tried to install it, but it was difficult, or we couldn't get it installed, or we did install it, but it didn't work. And so we continued to license on a subcapacity basis anyway, even though we were not able to get IBM licensing, the IBM license metric tool installed or configured or reporting the way we were supposed to. Again, the default requirement is you license the full capacity of the server unless you qualify for the exception. If ILMT did not work, you don't qualify. If the reporting was not accurate, you do not qualify. And so the only way you can qualify to license a portion of the server that you're using in a virtualized environment is to have the license metric tool installed and configured. Now, there are a couple of exceptions to that, but very, very few companies they qualify for those exceptions. So it is important to make sure that if you don't have an operable ILMT and you can't do the monthly or quarterly reporting as you're required to do, that you have an acceptable alternative and that IBM has told you in writing, or there's license guidance in writing that says that your alternative is something that IBM will accept in the event of a license review. So what happens if you are licensing on a subcapacity basis, but you don't have ILMT? If there is a software audit, IBM's auditors will come along and tell you that you have to pay for the difference between the licenses that you purchased and the licenses that would be required if you licensed the full capacity of the machine. And what that can mean is that you may be obligated legally to pay for licenses that you will never use and that will have no value to the company. So it's very important, and I mentioned this at the very beginning of the speech, it's really important to understand the true cost of the software environment before you roll out a project. Nowhere is this more true than in the subcapacity ILMT environment, because if clients really knew how much it would cost because they couldn't install and properly configure ILMT to license all of the PVUs on the physical machine, they may not go forward with the product in a virtualized environment. So many of my clients, after facing an audit, have actually taken their IBM environments back to a fully physical environment so that they don't have any requirement to have ILMT or reporting, and they always know exactly how many licenses they'll need to cover the maximum physical capacity of all of the machines running IBM products. So I've been mentioning audits off and on throughout the talk today. I'm going to spend the rest of the discussion talking about how you mitigate the risks that I've identified when you're responding to an audit. One of the first things that you need to do when IBM sends you a request to complete an audit is identify what the scope is. And many of my clients' responses, they agree to produce all information for all of their computers worldwide out of the gate. So IBM says, we'd like to do an audit, and my client says, great, we're going to give you all the information for everybody, everywhere, starting right now, going back as long as we have. That may not be the best approach. It may be that some of your foreign assets, hardware assets, are difficult to get to, or that certain people in certain geographic regions don't have access or the ability to understand what's deployed in other environments. So make sure you identify exactly what the scope is, identify whether IBM products that are provided to you by third parties, such as SAP, whether those are going to be included or excluded in the scope of the audit, and also identify as early as you can whether or not you're going to allow an on-site meeting for validation purposes, and whether or not IBM is going to accept your objection if you do not want to allow that on-site meeting to occur. It's also important to identify who your audit team is. It is commonly the case that my clients determine that Deloitte or KPMG or E&Y or PwC or whoever it is that IBM has selected for your particular audit is objectionable, primarily because the, say, Deloitte team is also doing your financial audit, and you don't want to have a situation where the where the Deloitte team who is reviewing your IBM compliance, it has the ability to communicate to your Deloitte team that's doing your financial audit. It is commonly the case that in non-disclosure agreements with the auditors, we can negotiate provisions that will help mitigate that risk. But you want to carefully consider whether or not the auditor that IBM has selected is acceptable. And if it isn't, you need to communicate very early on that the auditor in that particular case is objectionable for whatever reason. When you get an audit request, whether IBM is going to conduct the audit directly or whether there's going to be a third-party auditor, you need to make sure that you are carefully negotiating confidentiality agreements and making sure that those confidentiality agreements contain provisions in them that advise Deloitte or any other auditor about what they can do with the audit materials. You'll find that many instances, the auditors are not going to provide IBM with actual data. They're only going to provide IBM with summaries of the data, but you need to make sure that you have an opportunity to object to any of the findings or conclusions, and to have your objections noted and recorded before anything is produced to IBM, so that way IBM gets a complete package of what the auditors think the data is, as well as what you think the data is, because those two things don't always align. You want to make sure that you are carefully reviewing the time frame. And it is my experience, the auditors and software publishers, including IBM, are very aggressive when it comes to the time frame. And I'll see timelines that say things like, data collection will start in 7 days, and we expect the entire audit to resolve in 6 weeks. For a company with 40 locations worldwide, this is not a reasonable amount of time for an audit. And it's much more important for you to be realistic about it than to let the auditors pressure you into agreeing to a deadline that you know you have no way of meeting. So a lot of my clients will say to me, well, we just agreed to it, but we're going to tell them when it comes time to produce materials that we couldn't get it done and we need an extension. That always puts the IBM customer on the defensive to achieve a particular, in some cases, unrealistic deadline. And what I'd rather do instead is we're going to work on it diligently. We're going to give you updates periodically. And when we get it done, we'll send it to you promptly. I find that works much better, and you're much less defensive if you don't have to explain why you yet again failed to meet what I would consider to be an already unreasonable deadline. You also want to make sure that you understand, either from a review of your agreement or from a conversation with IBM, about what's going to happen if they find non-compliance. Are you going to be allowed to uninstall? Usually, no. Are you going to be allowed to buy only what you actually need, or substitute products that you need for products that are found to be non-compliant that you don't need? All of those things are items that you should discuss at the onset of the audit rather than at the end, so that you clearly understand and have an opportunity to prepare for what will happen if there are any non-compliant items found during the audit. And finally, again, make sure that you understand your audit provision in all of your relevant agreements. It is sometimes the case that different products are governed by different audit provisions, and you have to carefully evaluate what information you're required to give versus what information you can object to or tell IBM that you're not required to give that under the specific audit provision that governs that product. Once you get that audit notice, you'll want to make sure that you have a process internally that is designed to gather information, review what's installed or deployed on machines, and make sure that you have an opportunity to discuss that internally and determine whether there's anything that's outside the scope of the audit request before you send it. What I see is people get the audit notice, they start to panic, they run around as quickly as they can and start trying to find out what's installed on the computer. Maybe they have a product like Snow or CA or Trackit, and they're trying to run reports from those products so they can see what they have installed. And then as soon as they start getting data, they just start shoveling it over to the auditor to try to get the auditor to basically stop calling repeatedly to get additional information about the audit. So in other words, to keep the peace, they just start sending over raw data as soon as they can. It is commonly the case that the raw data is not accurate. It contains information that's not within the scope of the audit. No one has evaluated it to make sure that it contains the proper reporting, and the auditors can frequently misunderstand what the information is. In my experience, it's better to present a cohesive set of documents after everybody's reviewed it and they're comfortable that it's accurate. If you have a product that's designed to identify the software products, Make sure that you test it regularly. You know that it will work and that you feel like it is accurately reporting after you've done internal validation testing. In many of my clients' offices, particularly where it's a worldwide audit, it is especially difficult because in some instances they tell me we don't even know where all the computers are in Portugal. We don't know what they're using them for, so we can't tell you whether we're missing any computers because we don't even know what they are. So in order to be audit ready and to mitigate the risks associated with responding badly in an audit, I would say it's very important for my clients to know at any given time that they can identify the deployments for a particular software publisher and make sure that internally they can validate it and that they understand if, for instance, they're required to use ILMT, that they're not just printing out the ILMT reports every month or every quarter, but they're also validating it to make sure that it is accurate, because in many instances it's not. And then to the extent possible, make sure that you're involving legal so that if there is an issue that you need to talk about that could potentially cause a liability, and it is related to an expected dispute, that you're recovering all of that as much as possible by the attorney-work product privilege. All right, so entitlements. How do you find out about your IBM entitlements? A lot of times you have to look in the contracts. Some of the older contracts contained numbers for purchases. A lot of my clients use their support renewals to determine all of the licenses that they have. So in other words, they'll say IBM has an all or nothing support policy. So we're going to find all of our licenses on the most recent set, last year's set of entitlement renewals. That's not always the case, because it could be the case that a customer has entitlements for a product and that customer has stopped supporting one whole set of products, but they still have perpetual licenses. And so it is a good starting place to look at the renewals, but I don't think that's a good ending place. Also look and see if your organization has kept proof of entitlements or POEs for any software. It's often difficult to find these because they don't look like they're necessarily all that important. But if you find any proofs of entitlements, those are definitive answers on what entitlements you have, at least for that set of software products. So once you get an idea of what you have installed and what you have an entitlement for, then what you want to do is conduct a reconciliation where you analyze what you have installed versus what you can prove you own. And the auditors will do that too. But the reason that you want to do that internally is you need something with which you can compare the auditor's analysis and determine whether or not there are any mistakes. It is regularly the case that the auditors interpret the data differently than you would, in many instances resulting in significant, and I'm talking tens of millions of dollars worth of penalties, and they are easily remedied by a review of more details to demonstrate that you were not out of compliance in the first place. So it is not generally advisable for you to do no internal investigation, turn over all the raw data to the auditors, get the auditor's effective license position or deployment to entitlement survey, and then determine whether or not there are any mistakes. It's better for you to go into it understanding what the licensing position looks like, so that if any mistakes will jump out right away. So say you get that $45, $50 million demand from IBM, and they're saying you have 30 days to pay this, or we're going to terminate your license. How does that work? What do you do? First, you need to make sure, as I said, that the math is right, that the auditor's analysis is accurate. If there is, the auditors get their instructions from IBM. IBM pays them. IBM tells them, here's the license agreement. IBM tells them how to interpret the license agreement. So Deloitte or KPMG, those auditors do not act as independent arbiters of disagreements between you and IBM. If IBM says, count everything as full capacity, if ILMT is not installed, you are not going to convince them that they should give you an exception for whatever reason. That's between you and IBM. And so what you'll need to do is make sure that the auditor is quoting your objections so that you can take it up with IBM. But the way that they're going to present it on the report is that you're out of compliance. And so once you've reviewed the ELP or the DES or whatever acronym the auditors are using to describe your reconciliation report, where they evaluate what you have installed and what you can prove you own, you just check and make sure that the math and the analysis are right. If you can't get the auditor to revise the report because they've received contrary instructions from IBM, make sure you've written down all of your objections and that they have been reflected on the official report. Then you might get a call from the sales team saying, hey, we can resolve this. Once it goes back to the license team, we're not going to be able to resolve it as easily or as favorably. Make sure that you understand what is reasonable in the market for the products that you are charged with having over deployments on. And then identify if there's anything that you do need from an IBM perspective. It's important for me to mention that IBM will not allow you to substitute hardware or services for software. And so if they tell you in the end that you need to pay $15 million to resolve an issue, you can't say, can we buy $15 million worth of hardware and services to satisfy this software audit? Those are very different categories of operations in IBM. And IBM typically will say no to that, even if you escalate it all the way up to the CEO. So I have many clients that say, I have a personal relationship with somebody very high up at IBM. I'm going to take it up as far as I can up the ladder. And the answer is usually there's nothing I can do to help you. Most importantly, and the thing that people often don't do, much to my surprise, is they don't get a release. So you've gone through this whole process. The auditors have said, here's what you have to pay. IBM has said, we'll give you a discount, or you have to pay this amount, and you get the final resolution document. And then somebody on the IBM team will come along and say, we'll give you an extra discount if you don't need a release. And some of my clients will take it. So they'll resolve an audit without a release, which means that IBM can revisit that issue anytime they want. So make sure that even if it costs you a few extra dollars, you get the release because it's worth it. And you want to make sure that the release cuts off all liability as of the day you sign it. But it is also really important to understand that even if you get a release, it is not a release for future non-compliance. So you can't get a release that says up until today, November 29th, I am released from all liability for the installations that didn't have any ILMT associated with them, and say, great, now I don't have to install ILMT going forward either. That's not the way it works. A release is not a future license to use the software in the way that you have been using it. It is only an eraser for any liability that happened before the day of the release. So make sure if you need an adjustment to your license agreement, for instance, if the issue was that you were unlawfully allowing third parties to access the software, make sure that not only do you get a release, but that you also get a license to release the software as of that time. So I have a few minutes and I'll be watching for questions, but in the meantime, what I'd like to do is tell you some of the use of the case analyses that I've encountered recently that are both involving ILMT and not involving ILMT. So one of the sort of a commonly occurring event recently is that IBM Services is doing a lot of work setting up data centers for my customers. So the IBM Services team will come into the data center, set up the entire iSeries environment, configure it. My clients will never touch it. Then in the middle of the audit, IBM the IBM license management team will come along and say, you never installed ILMT. And so this whole iSeries environment in your data center is non-compliant because you're licensing it on a subcapacity basis and you haven't installed ILMT. Well, as you can imagine, when that happens, my clients say things like, we paid you $90 million to set it up. You should have set it up properly. You didn't set it up properly. If there's any liability affiliated with this particular installation or this particular environment, that liability rests on you, IBM, not on us, because we didn't set it up. IBM services contracts do not contain any provisions that require them either to set it up properly or to install ILMT. So if you're expecting IBM to set it up in a way that it will be compliant with the software licenses, you need to make sure when you're negotiating those services agreements that you include a provision in there that says expressly, IBM is agreeing to set this up in compliance with the following software licensing requirements. Because IBM could theoretically say in that environment, we did set it up in compliance with your licenses, you just didn't buy enough because we didn't install ILMT. So if you are having IBM services teams set up data centers, please make sure that your agreements specifically say what you expect IBM to do, because it is commonly the case that my clients expect IBM to set it up where it is completely licensed when they leave, and then it doesn't happen. Another common issue that I found, particularly in South America, is that IBM will refer a partner in South America to help the client set up ILMT or set up a virtualized environment. So IBM will tell the customer, you can hire our partner. They are a leading expert in getting things set up properly, and they will help you get everything set up where it's licensed. In many of those cases, the third party is setting up the environment. The IBM end user is never touching the environment. And then in the audit, the environment's set up completely wrongly, and IBM wants to come back to the IBM customer and say, we know we recommended the provider to you that set it up incorrectly, and we find that the provider did it wrong, and this is how much you owe us. In those cases, IBM will sometimes take some accountability for recommending the provider, and they won't completely give you a dollar for dollar reduction on how to or to alleviate all of your potential exposure related to that item. But IBM is often willing to work with people in audits to make sure that you're not receiving the full brunt of the mistake that the IBM recommended partner used. One of the other larger issues that I'm seeing when people are outsourcing to the cloud and when IBM is acquiring new service providers that they're providing service offerings, is that a lot of my clients are global. They're subject to GDPR or many other regulatory regimes. And you have to make sure when you're evaluating the business case at the very beginning, before you even start negotiating the terms of the agreement, is what protections IBM is going to be willing to give you in that regulated environment. So sometimes provisions like we agree to comply with all necessary laws and regulations are kind of afterthoughts, and people aren't really spending a lot of time negotiating those terms and provisions. But it is increasingly common that those provisions are becoming critical. For instance, if IBM is providing you an outsourced HR solution and you're a global company that takes applications from people all around the world, is IBM going to be able to promise you that if your foreign applicant wants to be forgotten under GDPR, that IBM can do that? I can tell you that usually the answer is no. And so IBM's default position on regulatory requirements is that IBM is going to be subject to all of the requirements it's subject to, but you as a customer have to make sure that the solution meets your requirements before you buy it. And so many people are receiving a harsh awakening when they learn that IBM is not willing to undertake any of the requirements that are necessarily going to govern a relationship between you, the IBM end user, and your customers or employees or users of the products. So make sure that when you are entering into those agreements with IBM, that the solution, you're carefully reviewing, particularly in cloud arrangements, those regulatory requirements and what they're undertaking to do and how they're going to protect the data and what happens if they don't protect the data. And if it's not a good solution for you, it's not a good idea to enter into that arrangement. I'd like to thank everybody for your time and attention today. Diana Peterson will be sending you copies of the slides upon request. And thank you. I hope you all have a wonderful rest of your day. Good afternoon.